Welcome back. You're watching Capital Connection, broadcast live from London, Bahrain and Singapore. Let's get straight out to David Costa now. He's Dean at Robert Kennedy College and joins us from Zurich. Thanks so much for coming to speak to us today. Let's talk Greece. We had the decision overnight, or the vote of confidence, I guess, overnight. What impact do you think we'll see on markets here in Europe today when we get up and trading?
Good morning, Becky. Well, I see a positive reaction from the markets for what happened in Greece. As we have seen yesterday already, the market somehow priced in this positive outcome on the short term. But on the long term, the bigger problem remains, which is, can really Greece and other peripheral economy have a way to grow given the very heavy austerity measure? So in the short term, I see a positive way of reaction on the market, but on the long term, doubts remain. So it depends to see how convincing is the short-term reaction.
Yeah, David, even amid widespread perception that Greece will at some point reach a default situation, the euro is still holding on to 143, and you think that the Chinese premier's visit to the UK, Hungary and Germany later this week, and if he outlines some plans for further euro-type investments, that's going to be a huge boost to the single currency. Talk us through what you mean.
Yes, I think that the visit is pretty crucial because the way that euro could really see new heights here is a combination of positive factors. One is the resolution of the Greek problem as soon as possible. But secondly, I also see China moving away from the US dollar and increasing some of their foreign reserve into euro. China has already signaled some interest on buying more of the European debt, also peripheral debt. So I think that's pretty crucial to see throughout the summer a positive outcome of the euro, which is in the cards and could give pretty good results to investors, especially given the interest rate situation, which will happen on increase in Europe, pretty much priced in, and will not happen in the US dollar in the US.
David, the debt crisis in Greece is offering support for gold, but as I mentioned earlier, we're only about 0.7% off the all-time record highs that we saw in early May, but you're saying this is still a good entry point. Why is that?
Absolutely. I mean, whenever we have uncertainty throughout the world, we have seen gold going higher. Usually, it's also a seasonal matter. Gold is pretty much on the negative side throughout the summer. So we'll take an opportunity from more volatility on gold and possibly drops throughout the summer as entry point for the long term. Because I think there are still so many issues. And I think investors should act a bit like central banks and accumulate gold in those periods of difficulties. So I think there is still a possibility of a long run, particularly when we see more weakness on the US dollar coming through, and that's really will be positive for gold.
David, I know you summarise your strategy as cautious but optimistic. How does that translate into the real world? How do investors invest according to that philosophy?
I would really be careful on selecting the best opportunities in Europe and also in countries like Switzerland. I still see asset managers as having a great benefit because whatever happens negative throughout the world is positive for banks and asset managers in Switzerland. So I see that's an opportunity, but also European companies, European conservative companies that despite what happened, despite what may happen, will have a strong will report strong earnings in the future. So I still see this as a buying opportunity, particularly in Switzerland for asset managers and in Europe for more consolidated companies which will not be impacted as much as other companies.
Okay, David, thanks for that. David Costa, Dean at Robert Kennedy College. Now, more on